Well, welcome to the next panel to discuss how retail investor markets can really boost up European economic stability and growth. It's either very difficult or easy. I don't know how to take the approach to continue after you, because I think that you summarized the overall landscape pretty well, and I couldn't agree more with you. So in that sense, I could comment that I do not have anything to add, anything to say, so please the panel come in. But then again, if I look the other perspective, and this is the political perspective on this challenge, is that we are in enormous challenges. It's not only the sluggish growth, climate change, that is going to probably hit hard the financial markets much faster than what we see nowadays. I'm sort of having the gloomy pictures of from 10 to 20 years that we are going to have the impact if we do not sort of speed up the curve of combating climate change and resource efficiency. So, but that is another story, but I just need to underline it because I think that the sustainable finance is the key, what needs to happen, because money runs the world, as you know. And then if we can set up that kind of a guiding principles in investments, in lending, in interpretation of significant harm, and on preferential treatment, for example, investments on sustainable buildings, that at least can sort of pave or soften the way for us. But then there's the autocratic populism. And while we are speaking here about the investor trust, retail investor trust, we are talking about capital markets union, retail market union, investment union, banking union. You probably can guess what the people on the streets and what the populists and member states in increasing numbers are saying. They are saying, we do better without the Europe. They think that all Brussels, Bruges, Paris, Nice, and whatever the location in Europe can do better only by themselves. And there where you go to a municipality level, we all understand that one city or region can't compete in the global markets or deal with banking supervision or adequate capitals or investments or anything basically. So the member states is not against the individual municipality. But then when you get on the EU level, it changes. The EU is the black dragon you need to fight against. And why I wanted to talk about this, it links directly to retail investor trust and politicians' willingness to find compromises and work together. So this is kind of an appeal to you also, that when you talk with your friends, that matter your enemies and competitors and people you hardly know, remind them to vote. We can't sort of change the minds of the populists. They are going to vote anyway, and they are going to lift their middle finger in the voting booth. But there are a lot of people that are just plainly ignorant about the EU. They think EU is, well, I don't know, but it's probably okay. I can't sort of say anything new, and there's no point of voting. These are the people we should be recruiting to vote. Then about the challenges. Politically, it is of course the big question how the next parliament is going to look like. But then I'll move to retail markets, okay? Europe is pretty bank dependent, as we know. And we are very poor on capital, venture capital, and different kind of a fund structure. And because of this way how we are organized, we are very poor on retail investor trust, pan-European retail investors, and the appetite to move from deposits to investing. And sort of I can understand, because if you do not have the European supervision, I'm not so sure that I would like to put all of my pension funds to Greece, Malta, Cyprus, or that matter any other very reliable good investor in some parts of the Europe I am not that well aware, and I might have some stereotypes. Then how do you think we could create a trustworthy retail investor? So the first point is the supervision. The second point is, you are all probably are well aware, we are debating the EDIS in European Parliament and the deposit guarantee scheme. But do we have that kind of a guarantee scheme and understanding of retail investors? If they doubt to invest in Portugal or that matter Finland, can they rely that their rights are the same, they are properly protected, and in case there's some issues, they can be compensated? And this is very difficult and hard part, like the common shared liability in the EDIS side. And I think that in the retail investor strategy, we did take some steps forward, but no, we did not take adequate steps. We would need to have a common consumer protection, that is retail investor protection scheme, and that hopefully is on the next Parliament's agenda and Commission's agenda. And we do need a better information, harmonized information about the investment products and the environmental matters also. And we need that matter, a better harmonization still about the financial regulation, so that you do not end up creating that kind of a black holes. Nowadays, when you first see an animal, then you define what it is and then you regulate it. But to me, if it sounds like a bank, it walks like a bank, and it smells like a bank, it's bank, whatever you call it. And it's a derivate, whatever betting instrument you call it, if it's a derivate. And why it is so difficult to go for that kind of an inlined regulation where you cover all upcoming products too? If it does these features, be it peer-to-peer, be it whatever new type of the funding element, be it online, virtual, based somewhere else, it is either banking, it is investment, it is lending, or it is a security. And then you cover it all. And that's why I think that when we are talking a lot of this kind of a administrative burden and cutting it down, this could be one perfect example. And by the way, when you start that, hopefully, you could start by harmonizing the sustainable finance regulation. We are perfect in politics, making political compromises each and every time differently in each and every piece of legislation. What you report, what is the threshold, what substances there are, and that's why you, of course, add the reporting, but you also diminish the information and the clarity for retail investors. Could you just review it with that kind of a mandate for the Commission without changing the content and the spirit of the regulation to harmonize the details so that you could have one reporting platform and you connect that to the information side for the retail investors so that both the environmental, ESG, and other information, the profitability and the risks and the keys can be found in the same place. So these are just some thinkings about what we can do in this side. But I think that it would be now interesting to go into the discussion and the panel and to start to dwell a bit deeper in the matters of what actually we can do to empower the retail investors. and to increase the participation in capital markets. And I don't want to take more time, but there are subjects like how you can use the financial sector as responsible shareholder in the companies, push for the environmental and climate transition, and actually empower people and the retail investors and the clients by that way too. Thank you.
Thank you very much, Sirpa. Guillaume, could I ask you to come up on stage with your panelists for the first panel?
Good afternoon. So we are only 20 minutes late, so I will proceed. Thanks so much to José Manuel Campa and to Sirpa, and especially Sirpa, to have given us the big picture. And so I did not plan to say that, but yes, please tell your relatives to vote and tell them to tell their relatives to vote, and etc. This is very important. I'm very happy to moderate the panel. I will not present the panelists because you have everything in this very nice brochure. It's all, as you know, extremely talented, experienced VIPs, and so we are very happy that they participate. To set the scene, I just wanted to show you a few graphs because José Manuel Campa has left, but he said, I like this parallel between the banking union and the CMU. I should say SIU. I have to get trained to that. Savings and Investments Union. The banking union stems, like always, as he said, remember Jean Monnet, from the 2008 crisis. But I think today we are also in a crisis, and I'm going to show you a few figures. So, economically, when you look at GDP, in fact, I will compare to the US, but this, we could do the same with Asia. I just didn't have time to gather all the right figures. So, globally, economically, there is a problem. You heard José Manuel Campa on the projections for the next 5 years. Not good, especially relatively to other regions like Asia and the US. Remember, the Capital Market Union was about developing European capital markets. Unfortunately, you see the reverse. We were about, at the start of the CMU, we were about 1/4 of the US market cap. Today, we are about 1/6, and you see the trend is not positive. Why? Well, first, if you look at prices of stocks, we have the US stocks, the first 500 stocks compared to the first 600 European stocks that have increased about almost 3 times as much as European stocks. So, no surprise, the price-earning ratio gap has widened. And why is that? Many reasons, but one key reason is my last graph, is that when you look at the earnings per share, still the same, from the first 600 European companies, listed companies, and the first Americans, you can see that the earnings of US-listed companies have grown 4 times more than the European ones. And that is a big problem because it means European companies have less money, to be blunt, than the US ones. And the problem is money is needed, especially, for example, for the environmental and sustainability transition, but also, may I remind you that Europe is really close to war today. We have gained 70 years of peace thanks to the European Union, so tell that to your relatives as well. The European Union does have advantage, but as you know, the war is very close now to our doors. So, as you know, EU governments have less and less money, and some have no money anymore. So money has to come from somewhere. Last statistic I would like to give you that is not on the graph is currently, so you've seen the US market cap, it's 62% of the world. It's 90% of settlements to indemnify investor abuse. So talking about investor trust and investor protection, the far west is not west, is here, because you see what remains for non-US abused investors. So I will switch now to the panel. This panel will be focusing on the retail investment aspects, focusing mostly, because I'm sure Marcel would like to talk a bit more broadly, on the retail investment aspects of the Capital Market Union. Savings and Investments Union, I like this term very much. It refers to the real economy, the savers, investors on the one side, on the offer side of capital, and the enterprises, the businesses who need investments on the demand side. And the second panel will of course focus on all the other aspects of this Savings and Investments Union, just getting trained. And so for this, I will ask questions driven from our manifesto that was published last January, that you have. And so there are key proposals there. So I will ask the panelists what they think about them. And actually, what is good is that many of them have inspired, and that's very encouraging, the Eurogroup report of last March. And today, the Letta report of Enrico Letta. So, without further talking at here, I might try to join the, to get closer to you. And I would like first to give the floor to Marcel Haag. Thank you, Marcel, for being here and tell us more about what is the assessment you make today. I know it's not an easy time for the Commission because it's going to enter into a new cycle, but what's your assessment and maybe a bit forward-looking on the what you still call the Capital Market Union, I think.
Yeah, thank you very much, Guillaume, and good afternoon. It's good to see a lot of familiar faces in the audience. I pick it up where José Manuel Campa left it when he said the Capital Markets Union is not new. Indeed, it is not new. It's been decades now that we're trying to develop an internal market for capital in the EU, and it's only 15 years that we call this effort a Capital Markets Union. And at the time, the reason was that it was thought that calling it a union would give that endeavor the significance and importance that it certainly deserves, and also put it at par with the banking union. Since we have worked on two action plans, and the Commission has delivered under this mandate all the initiatives that were foreseen under these action plans. Many of the initiatives have been adopted by the co-legislators, the European Single Access Point, the Consolidated Tape, the Listing Act, to name just a few. And then there are still some outstanding issues on which we are working, the retail investor strategy, and I'm sure that we will have the opportunity to come back on that, but also the insolvency proposal and a proposal on the simplification of the withholding tax return. We are still trying to make as much progress with the co-legislators as we can under this mandate. So we're not only looking forward at the next mandate, but we are still trying to do as much of the unfinished business and trying to get as much done as we can. And then, of course, and I think that has also become clear, the nature of the Capital Markets Union, and maybe we rename it, is such that you can't compare it to the banking union in the respect that there are not a few big ticket items that you can tick off and then you can say it's done. The Capital Markets Union is a continuous endeavor. There is no finishing line, but we have to go many steps to get there, and we are committed to continue on this path towards completing and improving the Capital Markets Union, make our markets more attractive for investors and businesses. Now, there is a number of reports that are now being published, and the letter report today. There will be a number of other reports still coming. The report by Mario Draghi on European competitiveness. But then there are also reports that are being prepared at national level. There's a Dutch report. There will be the report by Christian Noyer coming out, I believe, sometime next week. So we will have a number of important contributions as an input. We had the Eurogroup statement. The European Council is looking at the issue. We have now a significant attention politically for the Capital Markets Union, which was not the case in the past. We think that this is necessary because the Capital Markets Union is a whole of government challenge. It is not something that finance ministers can and the corresponding parts of the Commission can deliver on their own. It is something that entire governments and the Commission as a whole have to deliver. For instance, a number of the proposals that we made under the second action plan are proposals for which DG Just has the lead and which are discussed by justice ministers and not by finance ministers. So we're very happy that it's now the leaders that are taking charge of the Capital Markets Union file, because that is where this file really belongs. Now, we are currently waiting for all the input, trying to digest it, to be able to develop our own position, our own views, but certainly beyond finishing what we have started under this mandate, there are already a few items that I think where a consensus is emerging that they need to be looked at under the next mandate, and I think here Enrico Letta's report has is also converging with our views. But let me mention a few files. Securitization is something that we think will have to be looked at again under the next mandate. Then there is the issue of supervision, where we see that there are a lot of sometimes not so new ideas being floated, but we think that it is important to have another look at those ideas, maybe with a fresh pair of eyes, and certainly calmly and with a bit of recul. So we are willing to look at this with a very open mind and see what can be done in this field. And then there is the issue of long-term investment that plays an important role in the Letta report. And I would say long-term investment / pensions. It is a sensitive issue. It is something that we will not be able to deliver at the European level alone, because tax incentives will play a very important role for making a long-term investment instrument or several more attractive. So we will be looking into ways to increase retail participation and the footprint of long-term funding instruments in capital markets, which could then also be used as a pension tool. Those are some of the things that we want to be looking at. Other than that, we're following the discussion, and I'm also looking forward to the debate this afternoon.
Thank you very much, Marcel, and don't just follow, but intervene as you wish. In terms of consensual themes, as you said, securitization, supervision, I will leave it to my fellow moderator in a moment to talk about it. But of course, long-term investment, we'll talk about it. So let me go straight to one of the first key proposals we made in our manifesto regarding capital market union, savings and investment union, is to provide access to independent advice, or at least to better value for money. Why? Because it's the number one reason why today EU retail investors are not accessing simple, cost-efficient capital market instruments such as listed index funds, listed equities, listed bonds. In fact, the Eurogroup says the same thing. He says, provide easy access to simple, transparent, and low-cost retail investment products with appropriate risk-return profiles. So, okay, so I will not go deep into independent investment advice. This is not one of the consensual themes you were listing, but about one that may have more luck, which is the value for money. And I would like, in fact, Enrico Letta also alluded to that, because he said we need, the key objective is to appeal to savers, to attract savers within the EU and outside. So as you can imagine, and you've seen what has been going on in the US, yes, investors would be appealed if there is a decent perspective of a good risk-return profile. So first, maybe a question to Fausto from EIOPA. First, I wanted to know if you told Mr. Letta, who seems to focus very much on ESMA, that EIOPA actually supervises 70% of all packaged retail investment products, or maybe he did not hear you. No, that's a smiling question. My more substantive question is on value for money. Of course, that is part of the retail investor strategy proposal that is currently at the Parliament and the Council, but it has been also a lot of work done by ESMA and EIOPA, and I would like to get your perspective, especially you seem to be using or going towards using, like in fact the French supervisor ECPA, to peer group benchmarks on returns and costs. What about not using actual capital market benchmarks like the FCA, when it was in the European Union, did this value assessment and checked if the providers were in line with their objectives or not, and objectives benchmarks on the capital market performances. So, Fausto, value for money, please.
Thanks a lot, Guillaume. First of all, let me say that I'm very happy that the letter report mentioned pension, insurance key role in enhancing capital market. We have the sector has a lot of money to invest, and we need to make sure that this is helping the capital market union in general. The pension is an issue that is quite important, and I'm happy that the mentioning of these two key important points are there. I'm also happy that there is a reference, because I went quite quickly this morning through the report, but there is also a reference to enhancing the supervision in insurance sector, because I still believe that we, under our mandate in terms of supervisory convergence, EIOPA made a lot of we are proud of our effort, but still there is maybe in this completely changing environment, there is still maybe some opportunity, I don't know if it works, some further, let's say, efficiency that we can gain if we work together between central authority in Europe and the national authority, even more than what is happening today. There is a reference to it. Let's see if it's developed. Why this is important? Because if we speak about single market, and you mentioned already, there is a question of trust. Under our analysis, 1/3 of people that we interviewed, their product does not give enough value for money. 1/3 of the citizen, which is a question of important question of trust that we need to work on. That's why already time ago, before the proposal from the Commission, we started to develop this idea of value for money. How the principle is quite basic. We just need to offer the people some product which offer a value, which have cost and return that are proportionate to the needs of the people. Basically, so the idea is quite basic. The cost needs to be proportionate and reasonable. Proportionate to the guarantees offered, to the return offered, to the service offered, and reasonable in terms of expenses from the provider that offer the product. So the idea is just basic. Everybody, even my grandmother, can understand it. How to make it work is a bit more difficult, and that's why we developed a methodological paper already time ago. Now we are working on a methodology to have the benchmark, to cluster product, to make the comparison meaningful, so that you may have, when talking among supervisors, you may have a reference when a product is an outlier and you need to intervene to ask the provider of this product to change the product, or even to take off the market. And this is something that we are already doing since a while. It's not, even though it's not maybe so publicly known because there is not always a public announcement, but we compare products from different players. We speak about, among us, in the supervisory forum. We take action. Sometimes we are successful, sometimes less, and this is why there is a need to enhance our supervisory capacity, but it's already there, you know, it's already there. Now, the Commission proposal adds on top of what we are already developing even more, and we are super happy. We follow the negotiation, of course, depending on the negotiation, we will also adjust. But this is something that we are already doing without, let's say, underestimating the difficulty on this cluster comparison. But it's something that we are doing is already there, and we are proud to do it. On top of it, why we started? Because when we started to develop cost and past performances comparison, we saw a number of differences also across member states. We also saw sometimes justified, but sometimes less justified difference in terms of cross-border product, how much they cost. Generally, they cost more. There are good reasons, but we want to have a single market, yes, then we need to address it. And if you see the last report on cost and past performance, the costs are on average 2%, 2.1%, but with a lot of variety between 0.8 and 4.9 when it comes to unit-linked products. So this is something that in a single market, if we want to develop it, we need to try to address. And this is why we start working on the concept, and we will continue.
Thank you, Fausto. So EIOPA has been working a long time. National competent authorities also are working. For example, the French ACPR has already started some work with some similarities with what EIOPA is doing. But maybe let me ask an NCA and Annemie, what do you think about this value for money project?
Thank you very much, Guillaume. But before going into that, I would like to briefly, if you allow me, come back on the why do retail investors not access simple products. I think there is another consideration, which is, I'm not sure, I'm very happy to hear, I'm very happy that this topic is taken at the highest level and that leaders are in charge of it, but I'm not sure whether there is really a EU-wide societal consensus about the value of investing in equity. Is there an EU-wide consensus about the importance of the role of capital markets? There is a consensus, yes, among us, but is there a consensus at the bottom? A few weeks ago, I talked with the head of listing of Nasdaq Nordic, and he said, yeah, in Sweden, for example, every household is invested in equity markets through his pension fund, and measures the importance of developing capital markets. So there is a common consensus and an engagement bottom up. There is a demand. So just briefly wanted to say that. And I think also there is a very important bias with retail investors for local products. If we take the Belgian example, for example, we have an open economy. We have more than 5,000 authorized or registered collective investment funds. So that's the pan-European investment instrument par excellence. And 87% of this product offering are foreign products, and 13% are Belgian products, but the 13% Belgian products account for 60% of the investments. So there is a bias, a preference for local products, and a preference for the products of the local banker, the home banker. Also, evidence seems to show that commercial bank affiliated products underperform non-affiliated products. But despite that, the affiliated products have a large market share. So there is a bias. So now coming to value for money, I think the value for money approach can help break the bias, or should help break the home bias. And it has long been a major concern at European level, ESMA, EIOPA, also at national level, because what we see is, despite the efforts to really simplify information and information about the costs and the impact of cost on the performance of products, despite all efforts to simplify, notably in the key investor document, we see that investors really still struggle to distinguish a product with a less predictable outcome from a product that guarantees a minimum positive outcome from a product that guarantees that you get your money back. So it remains very difficult. And that is why supervisory authorities, as EIOPA, see it as their priority to develop instruments to enable investors to position the products they are offered, and to better understand the impact of costs on return. And we at the FSMA did so for UCITS, so for the collective investment schemes. We made a presentation, we posted it on our website, and it's really an instrument, first, allowing investors to understand the structures of costs and the impact on return, and second, to position the product they are offered with regard to an average, a Belgian average. We did so for structured notes, and by the way, within the review, when we review the product oversight and governance process for structured notes, we take as a reference also capital markets performance. So we really challenge the value for money of the notes on the basis of what you just said, the reference to the capital markets. We developed these instruments for insurance products where we compare premium collection and claims payments, payouts ratios. And we're in the process of doing so for second pillar pension products. So all this to say that we are a strong believer of empowering investors through these instruments. But we should also acknowledge, I think, the limits of the exercise. We will be able to identify outliers. When we talk about benchmarks, we talk about identifying outliers. And we succeed in identifying outliers and in persuading them to suspend offering of a product or to amend the characteristics of a product. But there I agree with you, Fausto, it's persuasion. So that is any effort to really enhance and force powers to enforce would be very welcome. But it's about outliers, and our action will end at the boundaries of reasonableness. So that we should acknowledge. And therefore, and that's the last element I would like to mention, an idea we had at the FSMA was, and an idea that I find also, I think, in the letter report is, why not make life much more easier for investors and identify ourselves cost-efficient products and label them? That would make life much more easy. ETFs are seen as the prototype of low barrier, simple and cost-efficient investment products, but to date, I think ETFs channel EU savings to the US. That's also something that is mentioned in the report, I think. So I think it would be worthwhile reflecting on an EU ETF scheme. And that would be a cost-efficient labeled product, and that addresses the limits of the value for money approach.
Thank you very much. Very interesting idea on the label, and on these ETFs that you suppose are channeling most funds to the US. I have a proposal to make and to test with the panel. Just 1 minute more on the value for money. It reminds me that one of the key proposals of the retail investor strategy proposal of the European Commission and finance was to have key investment product disclosures. So I'm referring to the package products KID, but also to the summary prospectus for securities. That is simple, short, intelligible, relevant, and digitally readable. And my question maybe first our panelists representing individual investors. Ben, for this key information disclosure, where we have the actual long-term past performance, the performance of the benchmark chosen by the provider, and the actual annual costs as a percentage of assets. What do you think about that, Ben? And then maybe I will ask a regulator as well.
Thank you for the question. I'll start by saying I'm quite happy today simply already to be here, because at the EU, for some reason, individual investors have a seat at the table, while in Belgium that is not always the case. And that's one of the things I wanted to mention. To engage the individual investor, you need to motivate him and make him happy to invest. And the general framing of investing in this country, and I think as this is Brussels, the capital of the EU, should be a leading example, and it is not the case. And this is for politicians as well as for the press. It seems that we are the enemy, and we feel we are not. So again, happy to be here today. I was also very happy this morning with the report by Mr. Letta, because it very much aligns with everything that Better Finance and we at a more local level are saying. I'm also very much in favor of this new potential name for the EMU, because if you remember that CIU, it sounds a bit like that sound that Ronaldo makes every time he scores. That would be a very easy way to get young people interested in what we are doing. As far as concerns the KAID, I wanted to thank Ms. Pietikainen for her advice to simplify. We do lack financial education, of course, so keeping it simple would be a helpful approach to get individual investors more attuned to what these products actually are. If you read the presentation of the panelists, you will see that I used to work for Morningstar, where we investigate the easy access to all these products by the retail market, and Europe and Belgium especially do not score very high on that. Easy access, well, it goes together with the access to good advice, I would say. We have to go through the bank. While in markets such as the United States, you can go straight to the asset manager or straight to the market, which we cannot here. So it sort of forces us to trust the advisors, whereby the advisors complain, and this is maybe more directed FSMA, that they cannot communicate to the retail advisor in a way that they would like to, because you cannot focus on performance, you cannot focus on risk, you cannot focus on, but these are things that we do really understand. So while I do agree that we should regulate how you present your performance and your risk, I would be a strong proponent, I would say, to make this possible again. We do not get presentations by the institutional providers of products simply because they say we are not allowed to say a lot to individual investors, so it's not worth it to come there. We can only do a little bit of marketing. We cannot go down into the product. So that would be my advice. As far as value for money is concerned, I would start by saying cheap isn't always good, which we have learned, but the regulatory constraints would help us to communicate to retail in a better way. That said, are there other things that made me happy today? We said we want to activate individual savings and investments for the EU. Well, to do that, in the report is also speech of oblique strategies. They didn't call them that way, but we find every day that it is very hard to convince people in the street to invest. They're afraid, they don't know what it is. So oblique strategies, behavioral finance, I would maybe promote a behavioral unit in the European Union to help specify the communication toward the target audience. And that may mean not talking directly about investment, but talking about the benefits indeed. And again, happy to see that the benefits for Europe are really, in the end, also benefits for the individual investor. We would be happy to invest in Europe if we were more aware maybe of how it benefits ourselves. I think that's the short of it.
Very comprehensive reply. Thank you, Ben. Maybe EIOPA, you would like also, Fausto, to say a word on the key information disclosure?
Yeah, the key information disclosure is important, but that is why we started to work on the value for money, actually, because we understood already time ago that disclosure, transparency is the basic, basically. You need to have it, and there are for sure ways to improve it, and we are happy that in the risk proposal there are actually good proposals. For example, in the insurance sector, we get rid of this overlap between Solvency II and other pieces of legislation when it comes to how to inform possible investor. But we don't need to and I'm also in favor of disclosing the past performances, provided that there are clear indications that past does not always mean that you will get
but also for future performance exactly. Disclosure, even more so, I think. Huh?
But it's we don't need to rely only on disclosure. This is our intimate strong belief, because we know that consumers do not always read everything, even when it's simple and it's layered, even when it's super easy. They tend to listen to their advisor, which is also a good thing if the advisor is a good one. So we need to really provide information after having checked in terms of consumer test also what is concretely happening. The famous behavioral science tell us what concretely happens with people. So it's important, but let's also provide the market with good quality value for money product. This is, if we achieve this, it's already a lot.
Thank you. Before we move on, just let me state that for better finance, we still would like to know how much money a product has made before investing in it, and actually what amount of money it has made, because we are in savings and investments, not donations. Huh? So the second key proposal of Better Finance was, but we started to talk about it, to facilitate access to simple, cost-efficient, and pan-European encouraging. Maybe I change a bit the order, because I'd like that we discussed at the prep call, because I'd like to rebound on what Annemie was saying about labeling, cost-efficient products. And you mentioned ETFs, but you said there is a problem, is that it could be more a channel to export our savings to the US. In fact, as a retail investor, and I wanted to check it maybe in fact with a market expert, Benoit, but I have been working in the US, and I've been working in Europe. And in the US, it's very simple. I'm a retail investor, so it's not a full-time job, so I want a simple product. I invest in the total stock market index fund, and I'm directly exposed to 3,700 US stocks, so of course, including small and mid caps. And by the way, that's the biggest equity fund in the world, 1.5 trillion. In Europe, I don't have this product. The large index fund on European stock is based on the stock 600, so it misses a lot of mid caps and misses all small caps. And it has a very important advantage for retail investors, because that gives you maximum diversification, including on the future, unicorns of the world, on innovative companies, etc. But also for the European economy, because it is the natural exit for private equity, and it should be developed. And retail investors are already participating more, relatively speaking, in the small and mid-cap market, both secondary and primary. I think Euronext will be able to confirm, but you can ask NASDAQ as well. And so I have been always calling for this. Why not? And to reassure you and Enrico Letta, why not ask European players, ETF providers, to build such an index fund? There are other indices provided by index providers than the stock 600. So first, I would like to get the feedback and the impressions of Benoit, please.
Thank you, Guillaume. Yeah, a few words on this one. Maybe just one idea on the value for money and the attention on the costs. In our perspective, you have to be careful with that one, because if you put a bit too much emphasis on that one, you could end up in challenging positions, whereby if you only focus on the costs, basically you will advantage products which are not listed today, which are potentially less transparent, where you could have conflicts of interest, and where basically you have the listed products which are more expensive but more transparent, and they have more important disclosure duties. So we question that one on asking ourselves, okay, do we go into the right direction with that one? And the same for the key IDs, because you have key IDs for listed products. That's using a lot of energy and a lot of emphasis within the issuers, but you have thousands, hundreds of thousands of these products which are listed, very transparent, and do you need also to issue key IDs for this one's liquidity. You indeed have many funds that attract, that focus on US stocks. And basically, they can, with the ETFs, with passive investment, you have low costs, and that comes to the detriment of the small and mid caps which are listed here, because we see that these small and mid caps, their liquidity is drying out. So the support must also make sure that we have specific measures to support the liquidity of the smaller and mid caps. Smaller and mid caps today, well, it's up to 30 to 40% of the liquidity that comes from retail investors. So it's becoming lesser and lesser, and so that also implies that these companies have less attractiveness for institutional investors, which has an impact on the valuation, and which has also an impact on their cost of capital and their possibility to raise additional funds. So the focus must also be on these smaller caps. If you look at the exchange in Brussels, 50 years ago we had between 300 and 350 listed companies for a total market cap of 7 billion euros. Today it's 120 listed companies for 336 billion euros of total market cap. So you see that there is a movement which is not only in Belgium, but you see it everywhere in the world, that companies tend to be larger and larger when they are listed, but you still have hidden gems among the small and mid caps. We see that, for instance, we have our blue chip index is the BEL 20, but we have the BEL mid for the mid caps. This index is outperforming the CAC 40, the IX 25 since many years because we have hidden gems there, but these companies tend to have more difficulties to attract institutional investors and to attract basically the attention of institutional investors that will help them to finance their next steps. And today I had lunch with a board member of a listed company, and she explained me that they just had a capital raise a few months ago, and they had many questions on the best way to raise capital. And finally they opted for an ABB because basically there was no other choice. They could have done a rights issue, but the rights issue is much more expensive, takes much more time. And she wondered why it was so much more expensive and why it took so much more time. And then, well, I explained the situation today of the prospectus regulation, but tomorrow, when the Listing Act will be live, all these transactions, up to 30% of the outstanding capital, will be feasible without prospectus, and I think that's a big step forward for all these corporates to basically allow them to raise money much more easily and to mobilize the savings and the investments of the retail investors. Because when retail investors get nice opportunities, they jump on it. In Belgium, we had the state bond that raised 22 billion euros. We saw it also with COVID, where retail investors jumped on securities accounts, and yeah, if we can mobilize this funding to finance the real economy, to finance our SMEs, our champions, our European champions, that would be great. Yeah.
Thank you, Benoit. So I hope you will help us find seed money for this very broad index fund, European domiciled index fund that will invest massively also in mid and small caps. One other way to get simple products is to eliminate the most complex ones, Annemie. I think with the existing regulation, structured products sold to retail investors, that happens a lot in France, for example, that cannot happen in Belgium. Could you give us your view on this? Because that's something, apparently, it is doable even without a change of regulation, European regulation.
Yes, happy to do so. Indeed, you can, to protect investors, to empower them, you can inform, you can create safe product frameworks, but you can also intervene in the product offering itself. And as you might know, that is one of the first things the FSMA did in 2011. That was kind of closing a deal with the sector and edicting a moratorium on the commercialization of overly complex structured financial products. Maybe a word about what triggered these initiatives. It was the fact that structured products, in our view, generally fitted in a push marketing strategies by product manufacturers. And it was kind of a value for money consideration avant la lettre, because the impression was that these products created value for money for the manufacturers, but that they did not necessarily, and it was the concern at the time, not necessarily took the consumer's view. And so the starting point of the moratorium were the FSMA's doubts about the benefit of structuring for the investor and about the ability of a retail investor to really fully understand the characteristics of the products. And the basic philosophy is that you cannot expect from a retail investor to make more than 3 calculations to calculate the return of a product. And these criteria were discussed with the sector at the time. So 3 calculations, and that some strategies are really too difficult to understand correctly. Since the moratorium, we have screened more than 6,500 structured products. And obviously the complexity of the market has been reduced. The moratorium still evolves and is an evolving instrument. The latest initiative we took, and we observed the evolution of the market. What we noticed, for example, very recently, a few years ago, is that product manufacturers use in-house benchmarks to calculate the return of a product. But in-house benchmarks are really opaque. They are not accessible to retail investors. And so that was the last initiative we took. That is within the framework of determining the target market for such products. Product manufacturers should really take into account only very highly skilled retail investors with high financial knowledge. And since then, we really almost observe no in-house benchmarks anymore. So that is an initiative we took to make retail investors move away from these structured products. And we simply took the stance that you can have doubts about the added value of structuring. As I said, that is a moratorium agreed upon with the sector. Every Belgian bank subscribed to the moratorium, but every bank is free to leave the moratorium also, which has not been the case up till now.
Thank you very much. We, at Better Finance, we have a lot of sympathy for this thing on the overly complex and impossible to guess what is their performance with highly structured products. And I think the European economy and Mr. Letta and the Eurogroup think also it's not what we need to focus on. I am told that I have to speed up, although the delay was not the responsibility of this panel. So maybe I will, two last questions for the panelists. I will have to skip, unfortunately, very important points on cross-border shareholder engagement and on collective redress, which are very important for us, but two other topics which are extremely important. First, the taxation, especially cross-border, and second, and it's a project you find in the Eurogroup, in Letta report, also in, and I love the name, a non-paper from the French Perm Rep, having a long-term, pan-European long-term investment product. But first, on taxation, just remind you two key proposals from Better Finance. First, even before, as Alexandra mentioned in her introduction, even before automating and make it simple for the tax refund, to start with, eliminate the double taxation of dividends within the EU between two countries. For example, not you, but Belgium is taxing Belgian dividends at 30%, and for example, French dividend at 40.5%. And that's after getting the withholding tax. For us, that is totally against the spirit of the Treaty of Rome and of the single market. And our second proposal is to tax the real long-term investment income, not the largely fictitious nominal income. I'm very happy to see that Letta report is really focusing on this importance of having tax incentives, especially when you ask people, contrary to their, almost unconscious feeling, to block the money for decades for their retirement, for example. So maybe, I don't know if I should start with the Commission because they have no competencies in taxation, but maybe if you want to say a word, Marcel.
Happy to do so. On withholding tax, I mean, this is really one of the basics of the single market. And, when we talk about home buyers of retail investors, look at how dividends are being taxed, and then, you might be onto one of the key reasons, and this is simply incomprehensible if we want to have a higher retail investor participation in European capital markets. It makes no sense. But you have seen that our faster proposal, which is much more modest than what you're calling for, in what kind of difficulties this is running. At the level of the member states, to try. Now, on the long-term savings product, I think Mr. Letta quite rightly points out that there needs to be a tax element, and if you look around in the member states, the successful products, they always have a tax element. But that, of course, that being said, it's easier to say than to do, because we would need the member states to be on board for that. But we can only hope that I know that a number of member states are already interested in the development of such a product, being fully aware that there is a tax element that is needed. we can only hope that when we continue the debate and deepen the discussion, that more member states will come around to agree to that conclusion.
Thank you. I will give the floor to the individual investors, but first, as this long-term product, Leta alluded to the PEP, to a workspace product. I know the PEP is dear to the heart, not only of Better Finance, but also of EIOPA. So maybe first Fausto and then Ben, and then if any other wants to react.
We have been working on the PEP for years. That's why we really want this to fly. And unfortunately, this is not yet the case. We are convinced that this is an additional tool to fight against the pension bomb we are facing. And unfortunately, this is the take-up from the provider is not yet there. We only have one product. The reason is actually what you mentioned in terms of tax treatment, for sure, but there is also a need to revise a bit the regulation, because there is a cap on costs that I have been told by many providers can be the limit of this taking up from the provider. I would really... I know that I'm not saying that I agree that the cost cap that was put there is unsustainable from a business perspective. I do believe it's sustainable because it's 1%, if I remember correctly. But there is actually something that we need to address, because if we work on a regulation, we work on a tool to fight against the pension bomb that is coming, and we know that the pension issue has to be faced with the three pillars. One is not enough. We work on the occupational pension, we work then on the second pillar. The state is not in our remit, but we provided the Commission with some good advice on how to enhance the pension dashboard, pension tracking system, and to make people aware what they will get the day after they stop working. This is key, because people are not aware, simply. So if the day they become aware is too far away, then they don't have time to save anything. Then it's too late. That's why we work on it. And the PEP can help. And it's a simple, transparent, easy, super clear. Why? Why it does not fly yet? And I think we need to work on it again. We cannot stop working on it till when it will fly.
And Leta agrees. Thanks, Fausto. And Ben?
I just wanted to say, trust Guillaume to find the one thing that makes me less happy. The translation of EU regulation and guidelines to the local level. May I put you all on the spot and simply ask, who of you invests? Simply raise your hand. See, this is why we're in the right room. When debating with local politicians in Belgium, I unfortunately have to say, none of them invest. Can we mandate politicians that they have to invest both in a European product and in a product of their local market, so that they can see the difference and maybe help them understand the importance of reducing all these hurdles?
And it's not only Belgian politicians. I can second your request. Anyone else wants to react before we close, either on the taxation or the long-term saving products?
On the taxation, I can only agree with what was said, and it will reduce the complexity of investing. Because today, I think we spoke about the people in the street who are maybe not really committed towards investing, but if they buy a stock which is from a company which is from another country, they will not understand that they have twice the taxation, and so they will just sell their stocks and take no investment position. So I think this is an obvious one. It's probably a challenging one for the budgets of our states. But on the other hand, it's really important one. If we want to attract all this money towards the SMEs, towards the large caps, we need to find ways to simplify the access to capital, and this one is really an obvious one.
Thank you, Benoit. And one last word for Annemie.
Thank you so much, Guillaume. I just wanted to say...
Last word will be for...
No, my impression is that the regulatory framework is there. We can create lots of products, pan-European products. It is possible. The UCITS framework is there, the LTIF framework is there, the PEP framework is there, the benchmark regulation is there. So the framework is there, it should be used. And of course, one big element is taxation. I learned that in Sweden they have an investment savings account, which is super easy, transparent, accessible. That would be a nice example. But we really, in my view, need an engagement from all stakeholders. And when Benoit talks about prospectus regulation, and really happy with you that will reduce burden, but we also have investment banks that accompany companies. Very expensive. They do not start when it's not about huge amounts of money. So it's really about the consensus I talked about in the beginning, and I'm not sure we are there yet. So everything that can help will help.
Yeah, thank you. So just to signal to everyone that the Eurogroup has a very great proposal on shareholder engagement, but I have no time to discuss it, so please, I refer to their report. Unfortunately, neither in Eurogroup report or in ETA's report, there's anything on how to tackle collective redress. That might be the topic of another conference. Do we have time for one question? So, from the audience, I mean. Is there any question to this panel before we listen to the boss of Annemie, I mean, the president of FSMA and of IOSCO? No, so we have been crystal clear, and so thank you very much to the panelists.